guys! Welcome to our vlog!
So hi guys, I am Andrea Carrion and our topic for today is about the financial service industry challenges and opportunities in 2021. So first, what is financial service company? So a financial service company offers a range of investments and financial services to the public with the aim of money. So this company operate in finance industry and maybe banks, insurance companies, credit card companies, and investment banks, and so on. Financial service firms are facing many challenges today. And here are the top 7 challenges financial service companies need to solve in 2021. So the first one is eliminating data breaches. A data breach is an incident where information is stolen or taken from a system without his knowledge or authorizations of the system's owner. And those who are victims of data breaches may suffer financial losses. So the next one is keeping up with regulations. Bank regulation is a form of government regulation which subject banks to certain requirements, restrictions, and guidelines. Traditional banks have to constantly evaluate and improve their operation to keep up with fast-changing consumer and shareholders' expectations, technology, and industry regulations. And under the challenge of keeping up with regulation, there are 10 key regulatory challenges to be discussed by Twinkle Tababa.
Hi guys, I'm Twinkle Tababa and I'm going to discuss the 10 key regulatory challenges according to KPMG. But before that, let us first define who KPMG is. KPMG stands for Feinfeld, Pitt, Marwick, Gardner. It is one of the big 4 accounting firms, together with Deloitte, PricewaterhouseCoopers, and Ernst & Youngs. These accounting firms are the 4 largest professional services firms in the world. They provide audit, transaction advisory, taxation, consulting, risk advisory, and actuarial services. And now, let's proceed to the 10 key regulatory challenges stated by KPMG. First in the line is change management. Change management is defined as the methods and manners in which a company describes and implements change within both its internal and external processes. Shifting to digitalization, limited in-person customer access, and remote working are just few of many changes implemented by the financial service companies to be able to continue their business despite of the pandemic. Next is credit risk and LIBOR change. Credit risk is the possibility of a loss resulting from a borrower's failure to repay a loan or meet contractual obligations. As for the LIBOR change, LIBOR stands for London Interbank Offered Rate. It serves as a globally accepted key benchmark interest rates that indicates borrowing costs between banks. By the end of 2001, LIBOR is expected to phase out. It is said that LIBOR will be replaced by SOFR or the Secured Overnight Financing Rate in the mid of June 2023. The third one is climate and ESG. E stands for environmental criteria, S is for social criteria, and G stands for governance criteria. ESG criteria may help investors avoid companies that might pose a greater financial risk due to their environmental or other practices. What you're seeing on the screen are some of the ESG factors. For 2021, the regulatory focus is clearly centered on climate change, a sub-element of E factors, though considerations will also be devoted to diversity, an S factor, and corporate commitment among G factors. Next one is the core risk management. In 2021, a strong risk management foundation and culture will be tested. This year, financial service companies should be prepared for critical incidences and capital or fiduciary exposures to be questioned. If core risk management is inadequate, and evaluate current frameworks for scalability. And the fifth key regulatory challenge is the operational resiliency and cybersecurity. Operational resilience refers to the ability of a business to change or adapt during the times of stress, disruptions, or uncertainty. Cybersecurity refers to the body of technologies, processes, and practices designed to protect networks, devices, programs, and data from attack, damage, or unauthorized access. And because of unexpected events, including COVID-19, social unrest, severe market dislocation, and unprecedented government intervention, along with expanded cyber threats, regulators expect for increased integration, improved operational resiliency capabilities, including cyber risk management. The sixth regulatory challenge is the compliance risk. Compliance risk is an organization's potential exposure to legal penalties, financial forfeiture, and material loss resulting from its failure to act in accordance with industry law and regulations, internal policies, or prescribed best practices. Seventh on the list is fraud and financial crime. Some of the most common crimes in the financial sectors are money laundering, terrorist financing, fraud, tax evasion, embezzlement, forgery, counterfeiting, and identity theft. In this time, financial crimes continue to increase day by day, and because of this, regulators expect firms to measure and respond to fraud and financial crime risks across business lines in a consistent and cohesive manner. The next regulatory challenge is the consumer and investors' protection. Regulatory attention will refocus back on consumer and investors' protections. Financial service companies should expect a high degree of scrutiny from the regulators regarding their treatment of customers throughout 2020 and 2021. Ninth on the list is payments. The rapid pace of change in the payment industry, customers find themselves with more options than ever before and are consistently on the lookout for new services that enable them to make payments faster and at lower cost. And the last key regulatory challenge is expanding regulatory authority. Growing numbers of mergers, alliances, and partnerships coupled with the realization amongst many non-banks and fintechs of their financial services core functions will expand licensing and chartering activity. With these growing numbers, regulatory authority will continue to expand even without the need for a new regulations. And that's the 10 key regulatory challenges in 2021. The continuation of the top 7 challenges in financial service companies will be discussed by Ms. Lian Santos.
Hi, I'm Lian, and in continuation of what Twinkle have discussed is number 3, which is exceeding customers' expectations. Consumers want more personalized service from their financial providers. That's why what a financial institution must do is to prioritize or focus on their client's main concern rather than showing all these advertisements. That's why it's called service, because it's doing work for other people. And like I said, you should prioritize their main concern or what they need from you, because regardless of what you advertise, they don't really mind about that because they really seek for the service that they really need. Fourth is surpassing the competition. Well, competition is inevitable, especially when you provide the same kind of service. But like I said earlier, the customers just want what they want. The chosen financial service provider of a consumer or a customer is where they entrusted their money with. That's why providing a good quality service to your customers will help you build a solid foundation, which will eventually develop into loyalty to both parties. And in that way, you get to keep your customers and build up a good reputation to the public and most likely be able to attract more customers. In that way, you won't have to compete with other financial service providers because the good quality service speaks for itself. Fifth is keeping up with the technology. As we all know, we are living in the modern era and everyone and everything has to keep up with the technology. With that being said, financial institutions or financial services are not exempted with keeping up with the technology. That's why they must invest in technology for them to achieve and attain business growth. Modernizing their technology will give convenience on the part of the financial institution and the customer. Example in banks, enabling big data solutions such as AI or artificial intelligence supported digital customer support assistant will give both parties convenience because on the side of the customer, he or she wouldn't have to go to the physical location just to report a certain concern, while on the part of a bank, that person will not have to add up to the volume that they accommodate in their physical location. More about artificial intelligence will be discussed by Eric, but for now, I will give you another example, wherein when a bank has its own application software or platform where their customers can sign in, of course, using their accounts, and they will be able to execute different types of transactions like transferring money to other banks or to other accounts, and or just basically check their balances anytime and anywhere.
Number 6. Incorporating AI into their firms. Artificial intelligence growth in organizations appears unstoppable and can do undoubtedly things to success in the firms or company. Most organizations use artificial intelligence because of its ability to work easier, simplify processes, and drive products. As a result of implementations of artificial intelligence in their business is that organizations see an increase in their productivity. Advantages of artificial intelligence. Disadvantages of artificial intelligence. Number 7. Organizing big data. Big data is a necessity, but also an obstacle for financial service firms. Big data is getting bigger because a lot of data is being created by a number of sources. Big data is the main character in today's business world, characterized by the huge amount of information reaching companies. Artificial intelligence would be the one who can help to gather and analyze those huge amounts of information that's reaching companies.
This has been Twinkle Tababa.
John Eric Santiago.
Ian Santos.
And I am Andrea Carrion.
Thanks for watching.